Hello, my name is Malachi, and we are talking options. Today we're going to say the very basic. What is an option? Okay, what is an option? Like I said, an option is a contract. It gives the buyer of the contract, and a lot of times I'm the seller, right? So I'm selling someone a contract, but it gives the buyer the right, but not the obligation. They don't have to buy or sell an underlying asset at a specific price, which is the strike price, before or on a specific expiration date. Keywords on there are right, not obligation, strike price, and expiration date, right? So we have to understand what each of those are. So, first thing, let's jump into Yahoo. I'll show you how to get there and I'll show you what each thing means. And then we'll look at a couple different other popular platforms, Thinkorswim and Robinhood, I think I'll jump into. So first, if you have an underlying asset, in this case, I'm going to do QQQ, which is Invesco's QQQ ETF, and type in QQQ options chain in your search engine. We'll just grab the first one that comes up, which is Yahoo. Who really Yahoos anymore, right? Who remembers those commercials? But first thing first, you've got your underlying asset right there. This was your close price. This is your pre-market price, just so you know. So these numbers are going to be slightly off because the market's closed. If you notice, these numbers aren't changing with the market. So I am doing this pre-market. It's 8 o'clock in the morning. So we're looking at the June 2nd expiration date, which is today. So a 1 day. And we'll look at the calls. And in this case, the calls are on one chart and the puts are on another. But let's first understand how to read this. Each one is a contract. So this is QQQ 25. So 2025, this year, '06 this month, '02 today. C is a call, and then your strike price, which in this case is $400. So that would mean if you wanted to buy or sell this, it would cost $116, which is that's the last price it traded for. That's obviously not something we're going to do. That's way out of the money. But we would look at closer to the money. So we closed at 519. This is when it opens, this line is going to change. But once again, QQQ 2025, June '06, day '02 is a call. Price is 005200, a bunch of zeros. Okay, so that's $520, right? And so the price of that is 219 or $2.19, but your trade, a contract's option is 100 shares. So it would, you would either get paid or someone would pay you approximately $219 to sell them 100 shares of QQQ at the end of today for $520. Now let's look at the puts. Now this is the opposite. This is someone's going to pay you or you're going to pay them an option to buy QQQ at the end of the day for the given price. So say your strike price is 519, QQQ 2025, June 2nd is a put. And what a put means, and we'll get into puts and calls later, again, in part of the class, but they're going to pay you or you're going to pay them for the option to purchase QQQ at $519. And that would be paid for $2.44 a share. Okay, so this is the Thinkorswim platform. Once again, it is pre-market, so the numbers won't be exact, but we're just looking at how this appears. So over here, I do have QQQ picked, and I can go to the expiration date are all listed here. You've got your dailies, right? And then Fridays are going to be your weeklies. And then these here are going to be your normal monthlies. So third Friday, I believe, of the month, the 20th of June, 18th of July, they're going to have higher volume long term. But so this is a 0 days. Now keep in mind if you do trade 0 days, another thing you've got to think about is pattern day trading. But once again, these numbers are going to be off. Remember, it closed at 519, so all these numbers were locked like they were 519. But you've got your calls on this side, on the left side, you've got your puts on the right side, as opposed to Yahoo that had them up and down. The change in color is where your current pricing is. We're at 516, but of course, the numbers on the contracts are going to be off because the market's closed. But all you would do in this case is you can just click if you want to sell or buy. See how the little icon changes? And there's you see your spread, 136 to 140. You want to sell a put, buy a put, just click on it, buy the put. It automatically pops up at 10. Don't make that mistake if you don't have that money in your account. And then you can just trade that. And obviously, I don't usually trade, I sell, but I also don't take the price they necessarily offer. I try and get a little bit better price. Every dollar counts. And once again, this is Robinhood, very similar to Thinkorswim. I think this is a little bit easier for doing other trades, spreads and such. It makes it very easy. It's all right in front of you. But 0 day, Monday, you got your puts on this side, you got your calls on the left side, your puts on the right side. And once again, it's just clicking bid or ask, sell, pops up your sell order. And then it literally just tells you collateral required for sell a put, 51,600. That may seem like a lot of money. It is. Don't get hung up on that. That's just, this is a large asset to trade. But I do enjoy it. And there you can trade spreads and cut that collateral required way down. So same difference on this as Thinkorswim, just a slightly different interface on how to handle it. But this is what it looks like. You've got your bid, your ask, your open interest, implied volatility, delta theta, last trade. We'll go over all that in different classes. So that was first class on options trading. Do me a favor, leave me a comment down below if you want to see more of this, what you would like to learn in options trading as well, because I know what I do and what makes me money, but what makes us all stronger is learning from everyone all the time. So if there's something that you trade on options that you think I should know or that I should do a class on, please leave me a comment down below. And for sure, please hit the like, hit the subscribe, and I will see you on the next one. Until then, let's all be healthy. Let's all make lots of money.